After a volatile week for stocks and crypto, all eyes are on what comes next. Joining us now to preview the week ahead is Jay Woods, Chief Market Strategist at Freedom Capital Markets. Jay, great to have you here at the desk.
Great to be back.
All right, so before we take a look at the week ahead, let's talk about the week that was. We saw total tech wreck, software meltdown. We saw Bitcoin down to 60K. It has since rebounded. We had the Dow hitting 50,000, an all-time high. Is that healthy market rotation, or is it maybe the start of something bigger breaking here?
Yeah, we're getting some mixed signals, so you have to kind of break it down. You have 17% of the S&P 500 making new highs, 3% making new lows. But in that 3% are those big software names, some of those tech names that have a lot of weight on the market. Then you have all those crypto-related assets and those crypto-related stocks that really took it on the chin. So the market breadth overall, very healthy, but when you have those big headline stocks getting hit and not allowing that market to rally, the S&P was down 0.01% last week, but the Dow made new highs. You have to look under the hood, and where's the leadership? And that's staples, industrials, energy, and small caps. Not a bad thing, but the tide is not lifting all boats. It's rotating, and it's rotating into names that are late cycle bull market leaders. And the concern is this late cycle bull market, or it's just a quick change and then we'll refresh the tech side in the coming weeks or months?
Well, what's your call? Is it late cycle, or is tech going to play catch up?
I think tech will play catch up. We'll have some relief rallies as we tape this. We're getting a relief rally in some of those software names that have been beaten down. But we've seen cycles like this over time. Over the last 25 years, it's happened twice, around 2004 and then 2013-14. After 2-3 big years of double-digit gains in the index, we had a year where we were only up marginally, less than 5%, 1 to 5% in 05, and again in 14 to 15. So to me, what we're doing is digesting gains, rotating into sectors that won't have that power to really give us big gains as an index. But if you're a good manager of your assets, you're rotating into staples right now, you're capitalizing on good gains while technology gets its legs under it again before we go hopefully higher.
So we should level set our expectations and expect 1 to 5% gains this year?
Well, that's what I said in the beginning, when we did our
the end of last
2020
year. You said boring is best. You were expecting this rotation. We're seeing it.
Well, the playbook is still in play 5-6 weeks into the year. Let's see how it continues to go. But right now, we're seeing good growth on the earnings front. Look at stocks like Meta. Great earnings, didn't really go much higher than up 10%. Faded it back. We're seeing Google, great earnings, didn't make new highs. Microsoft wasn't too bad. They focused on the spend. Amazon the same. So those big cap names that have led us have been growing, but people are focused on other things, and they think AI is going to capitalize AI, and a lot of those software names, they're in the penalty box right now, and you're going to see winners and losers, and I think we're sifting through that right now to find out where those winners may be. But in the meantime, we're going to materials, very boring. We're going to some REITs, Simon Property Group, great name, good dividend, making new highs, but it's not going to make headlines here or make waves when you're looking at the overall market.
Okay, so let's talk about the week ahead. We have quite a few names on tap for earnings. Mag 7 obviously mostly out of the way. We still have NVIDIA to come back to. But this week we have names like Cisco, Legacy Tech. We have staples like Coca-Cola. We have Robinhood, software stocks like Datadog. How could earnings impact the narrative this week? What's going to move markets most?
Yeah, I think you have to break it down sector to sector. You mentioned Cisco, the old giant in the Dow still. If it breaks above 85, it's just on the precipice. We're talking all-time highs, a full reversal back to when? The dot-com peak, when that was the darling stock. That was the magnificent stock before we had an acronym for those. So Cisco has been that silent assassin, just keeps going higher and slowly trogging along. It could get momentum with a positive earnings as people realize, oh my God, yeah, I've missed this one. It's still not too late to get into it. So you have Cisco on the technology front. As far as software stocks, you have 3 in that IGV. That IGV is a software ETF that has been crushed down 30% over the last 6 to 8 weeks. getting a little bit of a relief rally. Well, that relief could get a little stronger when you have Unity Software down over 50% from its recent peaks. Datadogs and AppLovin, two names that have been really beaten down. If they report and we get some guidance that says, okay, maybe the software sell-off has been a little overdone, they could help lift the rest of the sector. The two that have been really hurting them, Oracle and Salesforce. Salesforce, 52-week low, the only Dow stock that made a new low last week. And then you look at Oracle, it's just been getting destroyed, getting a relief rally as we tape this. I still need to see a little more out of Oracle, get us back to that 50-day moving average, 200-day moving average would be really nice, before I believe that the all clear is there. I still think they have some issues going forward.
I'm curious, at what point does the tech weakness stop being rotation into other sectors and start becoming a bigger problem?
Yeah, well, if we can see, like, I think Microsoft is the bellwether when you look at that. Microsoft took it on the chin. They filled gaps going back to last April. Not at a 52-week low, 395, a very key level I'm watching there, but it's held and it's starting to rally. What you need to see is some consolidation. The one stock that hasn't reported, NVIDIA, that stock has gone sideways now for the better part of 6 months. It's going around this 175 to 190 level, and it's been holding. Can earnings break it out and we take another leg higher? We saw Palantir, similar, had great earnings. And guess what? Like Meta, it gapped up after earnings and then faded, and both of those stocks broke the 200-day moving average. So I use the 200-day moving average as a barometer of health, and right now that sector is not healthy. So what we need to do is see stabilization from a price action standpoint, another good quarter with a good guide where we can say, all right, this AI narrative that it's eating itself and cannibalizing us is a little overdone, and then we get back to maybe a quick bounce and then slow and steady growth, and that will take time.
Okay. We also have CPI and a delayed jobs report this week, a little bit later this week. How could that impact the rotation trade? And does this market want good news, or does this market want bad news?
That's a great question. I don't know what we want. We always want good news, but does it mean the market's going to react that way? Let's break it down. We talked jobs. That was supposed to be released last week. Because of the slight delay passing the budget, it was delayed until Wednesday. Jobs, unemployment, 4.4%. Let's see if that holds steady. When we talk about jobs, we also then talk about the other part of the dual mandate, inflation. No better indication of inflation than that CPI. That's the one number that causes more volatility than any other down here. They're looking for it to decrease from 2.7 to 2.5%. I found that a little surprising, but we've avoided and navigated the tariffs. Inflation looks like it could be coming down. If we get that 2.5 estimated number, I think that would bode well for the market, but then it throws us into the conundrum. Well, why would the Fed have to cut rates again? Everything is going well, and then we talk about the new Fed leader and how that goes. So there's a lot of drama from the economic front, and it will start to kick off once we get that jobs and CPI, because we don't care what Powell has to say. We want to care, well, will Warsh get put into office, and how can he justify cutting rates if things are running at a very cool level on both sides of the dual mandate?
So if you had to calm nervous investors with just a sentence or two right now, what would you say?
Let's focus on earnings in those stocks that have not participated over the last few years. Yeah, that rotational trade is real, so you look for something a little safer. Stocks in the healthcare sector, Merck, Amgen, Pfizer. Yes, Pfizer. I've hated this stock for years, but they're safer. They pay a nice dividend, and we're starting to see people rotate into those names. You said boring is back. I agree. Some of the REITs that have beaten down, Simon Property, doing all right, coming back. And then if you want to get a little more aggressive, some of the biotech names, Biogen had a great quarter last quarter. When you buy these biotech stocks, you have to worry about that next drug, and they have something brewing on the Alzheimer's front. If they get approval for that, then this stock could take off another 25, 30% quickly. But if we're still in that trial phase, it's still growing in the right direction. So I like Biogen as far as biotech goes.
And also want to quickly ask you about Bitcoin, because in your note a few weeks ago, you said if Bitcoin breaks below 77,000, the next leg lower is 60,000, which it did hit. You were spot on there.
Yeah.
Is Bitcoin out of the danger zone now that it's rebounded a bit? It's up to
No,
69,000?
Bitcoin, you have have to watch that one carefully, especially over the weekends, because there's less liquidity over the weekends. It gets a lot more volatile. 65,000 to 58,000. 58,000 is the 200 week moving average. That has been a cool barometer for that to follow. It almost got there, it got to 60,000. So in the 60 to 65 range, I would nibble. If you think, this is going to come back, then yes, you can get a nice sharp rally to 75,000 and still be in a downtrend. I don't think we're out of the woods when it comes to that. I only look at Bitcoin technically. I'm not smart enough or foolish enough to really do a deep dive into it. I focus on the equities related to it. Robinhood, which reports later this week, that got beaten down pretty hard, yet meanwhile, the trading activity should be through the roof. So I think Robinhood will give us an opportunity. If we do get another leg lower in Bitcoin and Robinhood gets into the high 60s, mid 60s, I think it would be a great opportunity for someone that's missed that trade to get in for the long term.
Okay, we'll keep that one on our radar for earnings as well. Before I let you go, you know what it's time for. You've done this before.
Yes.
Rapid fire game of this or that. No hedging.
No, and no prep, so I have no idea what you're about to throw at me.
No, you never do. All right, let's go here. Okay. Dow 50K, momentum peak or just the beginning?
I think just the beginning.
The great rotation, healthy handoff or a trap for bulls?
It's a healthy handoff, but it's not going to help with the tech sector just now.
From here, equal weight S&P or market cap weighted?
Equal weight for the next 3 to 6 months.
Small caps or mega caps?
Small caps right now.
U.S. or international?
International.
Bigger market mover this week? Jobs report or CPI?
CPI.
February outlook, bullish or bearish?
Neutral. That's bearish, I guess.
Strategy right now, protecting gains or chasing returns?
Protecting gains.
Shifting to tech, AI. Reset or bubble?
Reset.
Software, oversold opportunity or trap?
Oversold opportunity, but I don't think we're going to get the V that people are expecting.
AI infrastructure, hardware or software?
Right now, hardware.
So software stocks, buy the dip or stay on the sidelines?
I buy the dip, but I trade it. It's a tradable bounce.
Which trade has more upside right now? Tech or Bitcoin?
Tech.
Moving on to Fed and macro. Rates higher for longer or cuts sooner than expected?
I think we're going to get a cut sooner than expected given the transition.
Good news is bad news or bad news is bad news?
Bad news is bad news.
Trading market or investing market?
Investing market seeing the rotation.
Volatility creating opportunities or mistakes?
Both, but some opportunities in software right now.
Fear creating value or destroying it?
Creating value.
What's the one thing the market is underpricing this week?
What are we underpricing? We're underpricing these staples. I still think they can go higher.
Okay, so safer play for 2026, staples or tech?
Safer, staples.
Better value right now, Cisco or Coca-Cola?
Coca-Cola is safe. Cisco, though, looks great breaking out, and relatively to the tech peers, I like Cisco.
Momentum trade, Robinhood or Oracle, which is popping today?
Wow, both of them are broken stocks. I would go Robinhood over Oracle.
Investing style, buy and hold S&P or selective stock picking?
I'm always a buy and hold S&P guy.
Most misunderstood sector right now?
Oh, software. We don't know what are the winners or the losers. We're still trying to find that out.
Most dangerous narrative on Wall Street?
Buy the dip. It always works. That one day will not happen.
One chart every investor should be watching this week.
S&P equal weight breaking out to all-time new highs. That just spells the rotation. Slow, steady, boring is back.
Jay Woods, always a pleasure. Thanks so much.
Thank you.